Hello there, this is Imi from iTradeAIMS.com, AIMS Stress-Free Trading. Uh, Once again, I'm going to make a quick video, and I hope it is going to be a quick video. I get a lot of ideas here and there to make videos and stuff, but I don't get to it. But today I found a little bit of time, and I thought I'm going to make this video, which is how to use dynamic stop loss and target points for setup 1. Okay, this is for stage 3 only. So if you are in stage 3, congratulations, you have achieved that. While stage 1 is 5 batches of T20, and then you do another 5 after reviewing what you have learned in the first 5, and then you do another 5, and that will get you to stage 3. And then stage 3, there is a stage 4, which I will decide. If you are in stage 4, you can decide yourself, but it's going to take a long time to be in stage 3, and then there will be that time, I think, that you would know that you are now in stage 4. So I'm going to ask Jasmine if she is a stage 4 or not. But ideally in stage 3, you are actually either break even or mildly in profit, or you probably are in decent profit. But in stage 4, your understanding is much more different, and you have learned a lot more about the market and how you take and you trade it. So if you're in stage 1, right, you would have, this is a setup 1, right? So you have a wave 3, wave 4, an open gator, followed by a 4th wave. Purple is, well, it was inside the box, but then it came outside of the box and it's not really a strict thing that in that way. It's an understanding that you have to have. But it's best that purple and these gator lines are not touching. So anyway, here you have well, I have it red, but it could have been pink. But I consider this to be a red dot. So for a stage 1, this would definitely be a pink dot, and you would have to wait for fresh box. So for you, it won't be a trade at all. But for me, it was a trade because that's okay. Let's change this. So the low here was that's too small. The low that broke out was just like not even a pip, and then it closes inside. So for me, it's like still this box is not broken. And as you can see, my trade was still taken a little bit later when the candle actually closed outside. So this is stage 3 and beyond stage 3 things. So I was watching it, playing around in the garden and all that stuff with kids as well. And then when it broke outside, I actually took this trade. Now, the stop loss was not moved at this stage. The stop loss moved to that level after this candle. And later on, I kind of exited because I saw it around here that price was going up and I didn't want to be in this. But why did I do that? And that was because, now let me get rid of these. In a moment, I'm going to go into a real chart as well. But I was just trying this technique, which I should have tried many years ago. But anyway, so a dynamic stop loss and target point is where you know there's a setup 1 going on, and you know that you have known levels to the left. You know, price has created this level, reacted to it, bounced up, came back to it, reacted again to it, right? And it's kind of proven itself that there is some kind of I don't want to use the word resistance or support, but for the lack of anything better, we would call it support. I like to call it a floor, right? So there's some kind of a floor here, and you know that if price has reacted to these levels once, it might react to it again. It's not that it will always react to it. Sometimes it would just go crashing through it, but it gives you some evidence, some proof is there that something might happen. So based on that, if you can do this, and now let me change to the chart. Hope you can see this. So if you were taking this signal and you counted that it was about 16 pips, the box, and when I was taking this trade, I had this candle closed outside already, right? So for me, it was easy to say, okay, I'm going to take this trade here, and I'm going to have my stop loss somewhere there, about 15. Now, then I calculated what's the different distance to this significant level to the left, right? And that was around this much. So around 14, 15 was the best thing to do. So I thought, okay, what I'm going to do is I'm going to consider this as my first point to actually bring stop loss to break even. So why would I not allow you, or why is it not a great thing for you to do this in stage 1 and 2? Is because stage 1 and 2 is not for actually making profit. Trust me. I know it could be frustrating for you to say, oh, why is it not? But it's there's something that I learned from trading myself and working with a lot of other people, is that it's really not the fault of different systems out there that people are not actually successful. It's actually the problem of, or the lack thereof, of people who sell systems. They don't trade them themselves and they're not successful because they too have this problem. Nobody actually trades the strategy. And that is the problem. That's the discipline problem. Nobody actually follows their plan and rules. And actually, if people could strategize, plan, and then actually record and apply that plan over a course of period of time, there will be many more successful people, and a lot will get done. So there's this slack. So the first T20s, the stage 1 and stage 2, is to actually prove to yourself, can I actually follow a plan? And a lot of people actually assume that because they have done this in other areas of life, like for example, I'm a soldier, I'm very disciplined, I'm a bank manager, blah, blah, blah. Well, bank manager is different. But uh, yeah, I'm a doctor, I'm very disciplined. It's, it, it could be true for some people, but in most cases, this is a unique case of trading. It's money is involved here. People tend to become greedy and do all sorts of things. So first you have to prove yourself. So let's say, coming back to it, you're in stage 1. First of all, it's not even a trade for you because it would be a pink dot. But suppose it was a red dot. You'd have your stop loss calculated based on this. It would be around 20, and your target point would be somewhere around 40 points here. So let's put target zone 1. And if you don't know, this is a very easy way. You just go to, I don't know how I can do that. Can I from here? No. Anyway, some of the time. There is a video on how to draw target zone 1 anyway in the forum. So you start from where you think is the 3. Now here, 3 might have been here, but I think this is 1 and this is 2. And sometimes I don't like drawing my target zone from the start of wave 1. I'd rather start it from where I think is the start of the 3. So this is the start of the 3, end of 3, peak of 4. Now we have another factor. So target zone 1A has been reached and significant lows to the left. That gives me something else. So your target point would be around here. So you'd have to calculate, okay, can I take this trade? And you'd say, well, I need a 20 pip stop loss and a 40 target point, and target point 1 is a little bit closer. What should I do? Well, it's not that far away. So what I'll do is that I'll put my target point here, making my 2R profit slightly less than 2R, which is okay, like 1.9R, or that's fine. Bring it down to 1.5, up to 1.5R. You can actually have that in your plan, that even if the target point is like at least 1.5R, I will take it. It really doesn't matter, because the test is basically following that plan, that I will take a trade which has at least 2R target, and then I will move my stop loss to break even at 1R. and then I will not touch the trade and I will let it hit the target point. I mean, there are a lot of traders who would actually tell you that 9 out of 10 times they find it very hard for the trade to hit their target point. They think it won't hit it, and they kind of feel like, oh, they have to get out, and then they do get out, and then 5 minutes later the target point is hit. It must have happened to you as well. It happened to me many times. But now in stage three, if you want to improve your odds, uh, this is where you can incorporate this bit. And I always trade like this. So, for example, if I had the PO here, I would have moved my target point if my position size would have been based on this anyway on the box. So as soon as it triggers, then I would move my stop loss to the high or a few pips above the high of the trigger candle, or somewhere around where I think there is some relevant level to the left, for example, this and that. But this is a tight box, so I could have used it there anyway. But because I decided that I might move my break even to stop loss to break even when it reaches this point, I only had to work with 15 pips, so I brought my stop loss around here anyway. But even if it was all the way there, I would still have used this, and then I would have pursued target zone 1 here after that, but it didn't go, and it closed me out. And I'm going to try now to show you that you can achieve this, automate this by using ATM. Right, so I've for recording purposes, I actually recorded on a smaller screen, or actually like a small window, and it doesn't fit. ATM doesn't fit in there. So what I'll do is that I'm going to move it a little bit up there by doing that, and then I will move this here so you can see full buttons all the way down. This is the last button, right? So what you can do is to use the at level, thanks to Snom. Actually, he pointed out the other day to me. I had forgotten about this. This is a great way to do these manual things. So for example, normally you have a BER based on RR, 1 ratio R, so it will give you an automatic BE. But if you want to have yours, like for example mine on this level, I would click the at level, which would bring the at line. And I can bring the at line to this level, for example. And then any button from here, the white ones I can press, it will do that. So I will say at this line, I want you to bring stop loss to break even. So it will say stop loss BE 1. I can even say at, say half off. So what it can do is that it will close half, and it will bring stop loss to break even. Well, I won't do that, but this is what I would do. What I was trying to explain is you can achieve it on this. So your trade will enter here, and as soon as it hit this area, it will bring it to bring its stop loss to break even. And this is a dynamic way of increasing your odds and making more. So for me, if I had more data, or if I believe that price would definitely, turn around here, and I thought this profit was enough for me, or was it feasible, for example 1.5 hour, 1 hour, I could have actually said, okay, when it reaches there, get me out. But you can't do that in stage 1 and 2, because in stage 1 and 2, it's not your job to increase your profitability or do those clever trades. Rather, it is to train you for discipline. But the process is so interesting that when you do that, meanwhile, you will learn all about this. So you will get this experience, and you'll be able to make all these changes. I hope you enjoyed this video.